listeners, and welcome to another APS Weekly News Bulletin, keeping you up to date and well informed on the Australian property market. Now guys, a lot of you have been writing in, both listeners and clients writing in, asking about the negative gearing, the changes that Labor government are proposing, and if it is going to kill the housing market or create a significant issue for property investors in Australia. So what I thought I did, there was a lot of articles that got sent to me asking me to dissect and break down. What I started to do was go out and pick out the one that I thought was actually had the most information about what potentially is going to happen, and then break that down and give you guys my ideas on how that may play out and what potential repercussions could come off the back of it. The first article I've got here, guys, is what is negative gearing? How Labor policy change could spectacularly backfire on mum and dad investors, and renters could be worse off too. Article by Stephen Johnson, economics reporter for Daily Mail Australia. A possible plan by Labor to wind back negative gearing tax breaks for investor landlords could also end up hurting the people they are meant to help, renters. Anthony Albanese, in opposition, dumped his Labor predecessor Bill Shorten's policies in 2019 after the party lost its second election in a row. Labor lost the 2016-2019 elections with plans to scrap negative gearing for future purchases of existing homes and restrict it to just new properties. But 9 newspapers is now reporting that Labor wants to revisit existing negative gearing and capital gains tax discount policies, and has commissioned Treasury to do some modelling on possible changes. Treasurer Jim Chalmers on Wednesday confirmed his department was examining possible policy changes. Treasury looks at all kinds of policy options all the time. He told reporters it is not unusual for the public service, and in my case and my department, to examine issues that are being speculated about in the public or in Parliament. That's how a good public service operates. The article goes on to explain exactly what negative gearing is about and how it works. Under existing negative gearing policies, investors can claim their rental losses on their annual tax return. So if they're making a loss on that property over the course of a year in terms of cash flow, they're able to effectively claim that back against their taxable income. If the rental income is less than the cost of maintaining and paying off a property, a landlord is negatively geared and can claim that loss on their tax return for that financial year. The difference between the rental income and the cost of providing a rental property is deducted as an expense from an individual's income for that year. Labor is looking to revisit this policy because negative gearing has led to speculators buying up multiple properties, which they can later sell for a big capital gain. Along the way, these investors can negatively gear any number of properties. Traditional, more affordable housing markets like Brisbane, Perth and Adelaide had this year seen a double-digit surge in property values despite the Reserve Bank's 13 interest rate hikes in 2022 and 2023. This occurred as investors able to borrow against other investment properties were able to obtain finance from the bank and buy another home to lease out during a rental vacancy crisis. University of Technology Sydney property economics expert Dr. Mustafa Banguri and University of New South Wales professor Chi Lin Lee last year released a report arguing investors have historically bought property despite weak rental yields because of negative gearing. But scaling back negative gearing could also potentially hurt mum and dad investors who would be forced to sell because they can't claim their losses on tax. I'm going to run through a few other things here, guys, before I jump into my summary as well. Tax politics, as a final kind of wrap up of this guy's article as well. Labor, under Bill Hayden, lost the 1980 election when Malcolm Fraser's coalition government ran a scare campaign claiming he would introduce a capital gains tax. But Hawke was re-elected in 1984 with a vow to hold a tax summit, leading to a capital gains tax in 1985. The coalition lost the unlosable 1993 election when Liberal leader John Hewson proposed a 15% GST tax. John Howard, as opposition leader, ruled out a GST ahead of the 1996 election, using the phrase never ever, but was narrowly re-elected in 1998 on a platform of a 10% GST. So Labor's exploration of changes to negative gearing and the capital gains tax, despite losing 2 elections with those policies, simply shows that the political parties don't necessarily give up when voters say no. Guys, in summary, and my kind of thoughts and reasonings behind this as well, the Labor government, as we know, in 2016 to 2019, lost both of those elections. I remember quite clearly in 2019, it was again one of those cases that was supposedly an unlosable election. They were way in front until very late in the piece. They brought out the campaigning around negative gearing. And I remember myself and a lot of other people that were involved in the property industry at the time were pretty vocally against it because it was going to massively overhaul the property game. And not only, it's caused issues across the board because it has been in play for so long. Both renters and investors will become massively disadvantaged because of it, because a lot of people think it solves the housing crisis, but it 100% does not, because so many mum and dad investors, they need it to be able to hold that investment property. Now, if they've held it for 10 years and they bring that change about, and then all of a sudden they need to sell it. For one, those guys are going to cop a capital loss, or they may not make any money during that time frame. But what you're doing is you're going to pull a lot of rental stock off the market. So renters and the guys who are actually trying to get into their first property, if they haven't saved a deposit and they can't actually afford to buy it, it may become a point in time where it actually becomes a never ever sort of thing for them ever to be able to buy their own home. Because what will happen is rents will increase. As you take away a huge amount of rental stock from the market, if your negatively geared investors have to cash out because they can no longer afford to hold the property, there's going to be far fewer rental properties on the market, which is going to lead to increased rents and people either needing to stay at home longer, live in condensed households, not have that option and the ability to rent at rental prices where they currently are. If you guys out there think that the rental market is hard right now, wait until they scrap negative gearing, if they ever do, and you will see a massive surge in rental prices as a lot of people tap out and sell off their investment properties. Now, one of the things that I would say as an investor and looking at this thing as well, for myself, I'm not worried because either way, effectively the way that I like to build out my portfolios, I like to target high cash flow anyway. When you're in high cash flow and you're positively geared, negative gearing doesn't really come all that much into effect anyway. The people who are going to be the hardest hit by this are blue chip investors and investors that hold very high valued properties with very low rental yields. For example, a $2 million home in Sydney that might rent for $800, $1,000 a week. They also have a massive land tax bill. All these sorts of things they will no longer be able to claim. So they are the people who will be the hardest hit by this. And again, it will undoubtedly cause a surge in rents in those prices for one, because those markets will probably sell off almost all the rental stock in those areas because it is no longer going to be attainable to hang on to those properties and to continue to hold those assets, because if they can't claim that loss, it's just going to be pure loss on income. So what you're going to find, they're the areas that are probably going to be hardest hit by it. You're actually going to see undoubtedly a decrease in values in those areas as well as people sell out because they can't afford to hold, and there'll be less of a pool of buyers as well because investors won't be in the market buying that sort of asset. The one big thing that we'll see in this, obviously, as I said before, and to summarize the rental side of things, we are definitely going to see a rental surge. So if you're out there and you're playing the game, especially if you're buying in lower priced areas, about to go through growth cycles or going through growth cycles, all you're going to see again is an exacerbation of rental growth on that side of things. So most of those people will be fine from that perspective. One of the other huge parts of the equation is that, especially with APS and clients and obviously listeners of Scouting Australia podcast as well, you would know quite well that I like to build portfolios that effectively over the long term, we have a very high net return on those assets and a very low debt level. So over time, and especially the way that we want to build these portfolios out, negative gearing doesn't really come into account anyway, because over the long term, the idea is actually to build a passive income from these assets. So if anything, it's actually going to work more in our favor because rents are going to go through so much growth if they bring this in. It just means our incomes are going to rise off a rental side of things. We won't be able to claim the losses anyway, which we can't as it is. And because we're so far in front from that perspective, it's really not going to change anything on that end. If anything, it's only going to increase our bottom line from a passive income perspective. For investors that hold forever and never sell, they're going to be in a bit of strife potentially from that perspective because the negative gearing benefits are now going to be gone. But the investors that like to build portfolios with high net cash flows, low debt levels, it's going to be business as usual. And that's how I'd always treat this. In complete summary of this article and my opinion on it right now as well, guys, election's not till next year. We've got to play business as usual. It's not something that you get caught up in and you get stressed about and something that hasn't even happened yet. I think about some of the best buying I ever did was in 2019 when the federal election was coming up. And for about 3 months, everyone thought Labor was going to get in. And they had this huge campaign going around the negative gearing side of things. I literally believe they lost the election because they pushed so hard on that side of things that all the mum and dad investors in Australia, which there's over 2 million property investors in Australia, voted against them for that reason because I was taking those things off the board. The buying that I got in 2019 that I had access to because everyone was sitting on the sidelines not knowing what was going to happen was some of the best buying that I've ever had in my journey and in my portfolio. So for me, it's business as usual. Nothing changes. If something changes with that down the track, we can pivot and look at, okay, well, how do we build this out? How do we keep building the portfolio? What else do we potentially need to factor in? But ultimately, it's business as usual. There will undoubtedly be decent buying as a result. Markets are still going to grow. Rents are still going to grow. Keep building your portfolio business as usual until changes actually come into effect, if that government even gets in. So guys, that's my take on it. That's a wrap for another APS Weekly News Bulletin. I hope you took some great value out of it. I hope you got a bit of understanding in terms of where I sit when looking at negative gearing and the potential changes that could be coming through if they come through. If you took some great value out of it, make sure you send it on to someone else who also might take some value or potentially has been talking about it. And if you're not following us yet on the socials or on the channels, make sure you follow us on whatever your favorite listening platform is, whether that's YouTube, Spotify, iTunes, or on the socials at Instagram or whatnot as well. And until next week, guys, that's another Scouting Australia podcast.